Hi, I'm Jimmy. In this video, we're looking at 5 stocks that I believe could do very well over the next couple of years. Now, I'm hoping to avoid some of the more popular stocks, companies like Disney, Amazon, AT&T, Verizon, Microsoft. They're all good companies for sure, and I'm sure many of us like those companies. But my goal with this research, the research that I did for this video, is to try to find companies that haven't been on our radar too much recently, but they could still have great performance. And hopefully we can use this information to help expand and improve our portfolio and get us closer to our goal of achieving financial freedom. Okay, so let's jump right in. So I'm trying to identify companies that seem to have strong free cash flow potential, and they're trying to use that cash flow to grow their business in a smart way. I figure if we could find these companies and then buy them at a reasonable price, well, we should do good over the long run. And I've tried to vary the companies. I've tried to vary where the companies come from. I'm looking and trying to find some in different sectors. That way, if we see one that looks good, but it doesn't fit our portfolio, perhaps there's another one that also looks good that is better suited to our portfolio, perhaps from a different sector. Okay, so let's jump in. So the first company is Masco, ticker symbol MAS. Masco sells home improvement building products. They make things like plumbing products, building hardware. They sell paint. And basically, they do things that go into building new houses or maintaining a house. Now, one of the reasons that I like Masco is because I expect for a lot of their products to do perfectly fine in the current economic situation. And many raw material prices have been dropping recently, so it's even possible that Masco's margins slightly improve over the next year or two. Now, when I calculate the fair value for Masco stock using a discounted free cash flow valuation method, I came up with a fair value for their stock of about $57 per share, which is about 15% higher than the current stock price. And I came up with that estimate for intrinsic value using these free cash flow numbers. And as we could see, broadly speaking, free cash flow seems to be heading in the right direction. Now, the green bars are analyst estimates, and basically what I did is I took these analyst estimates, stuck them in a formula for a discounted free cash flow, and that's how we came up with the $57 fair value for Masco's stock. Now, any one of the companies that I mentioned in today's video could be worth a deeper dive. So if you see a company that I talk about that you think deserves its own video, please let me know in the comments below. And if you're curious how to perform a discounted free cash flow calculation with numbers like this, well, I actually did a video on that whole topic. I'll leave a link to that in the description below as well. Okay, next up, we have a similar company, and that is a home builder that I think could do quite well as the economy begins to settle down. That's D.R. Horton, ticker symbol DHI. And clearly, what D.R. Horton does is they're a home builder, and one of the things that I like about D.R. Horton is they often focus on entry-level homes. And operationally speaking, they're one of the most efficient home builders in the United States. And they have one of the best balance sheets among all home builders. And as we can see with this chart of free cash flow, including a few years of projections, well, free cash flow seems to be improving. And when I use these free cash flow numbers to come up with a DCF calculation, well, I got a fair value for DHI's stock of about $80 per share. So to me, D.R. Horton is one of those companies that deserve a deeper look. And I think that their business has a lot of upside at this point. Okay, now we jump over to the financial sector to a company called Global Payments, ticker symbol GPN. Global Payments provides a lot of the software and technology behind electronic transactions. So as the world shifts away from cash towards digital payments, well, Global Payments should do fairly well. And in 2019, Global Payments merged with a company called Total System Services. And it was an all-stock deal, so they didn't have to take on any additional debt to complete that merger. And I think that this merger helps strengthen Global Payments' position in the overall industry. Okay, simple enough. Now, when we look at their free cash flow numbers, and then we applied it to the discounted free cash flow template, well, I actually got a fair value of slightly less than $150 per share. So while I love Global Payments business and I love what they're doing, I'd like to see the stock pull back a little bit before we jumped in and bought it. So for me, this one belongs on our bucket list. Okay, now we jump over to a healthcare company in Edwards Life Sciences, ticker symbol EW. Edwards Life Sciences is a medical supplies company, and they do medical supplies and devices. and they're one of the early creators of one of the first artificial heart valves, and they make a lot of similar type products. So as we can imagine, in a world where surgeries to help improve the overall health of people are becoming more and more popular, or more and more common at least, I would expect for this company to do quite good over the long run. Now, when we look at their projected free cash flow numbers, well, we can see that they're projected to move in the right direction. Yet, despite the growth in free cash flow, the stock does seem slightly overvalued right now. When I did my calculation of fair value, well, we got an intrinsic value of about $45 per share. So while I think that this is another one of those great companies and could be a great addition to our portfolio, I just want to see the stock pull back a little bit before we add it. So once again, I think this one belongs in their bullpen. And I should say, I also get this stock being overvalued at this time, given the whole coronavirus situation. And many companies tied to healthcare have performed fairly well. So I think for us, we're just going to need to be patient and wait for a better price. Although, again, I think this one belongs in the bucket list. Okay, now we shift over to a company that I think looks fairly undervalued and could really be worth a deeper dive. This is probably the most interesting company I came across in this research. Next up, we have Switch Incorporated, ticker symbol SWCH. Switch designs, builds, operates, and manages data centers. And as we could imagine, with so many things going online and going to the cloud, well, data centers are going to become more and more important. And to me, a company that sets up and manages those data centers makes a lot of sense. Now, when we look at their free cash flow numbers, well, we can see that free cash flow is negative right now, but it's expected to go positive in the next couple of years. Now, I do want to point out that while their free cash flow numbers are in fact negative, this is actually a profitable company. Profits and free cash flow aren't really the same thing. Now, it may not be too surprising that a company, especially in the early years when they're first setting up and expanding their business, could be profitable but not necessarily have positive free cash flow. And that seems to be the situation that Switch is in right now. Now, with these numbers, our fair value, assuming that we believe the projections, because a lot of them, all of the free cash flow projections are going to lead to our intrinsic value, well, we came up with an intrinsic value of about $30 per share. So when we look at their stock chart, well, we can see that $30 a share is a huge upside from the current level. So overall, I think that it could make sense for us to take a closer look at this company and see if it makes sense in our portfolio. This is a really interesting opportunity, I think. Now, some of these companies do pay small dividends, but I've just been focusing on trying to find good companies. If you're more interested in good dividend-paying stocks, well, I recently did a video talking about just that. If you're curious, perhaps that could be a good next video for you to watch. I've got a link right here. I got a link in the description below. And thank you so much for sticking with me all the way to the end of the video. I really appreciate it. Thanks, and I'll see you in the next video.